Hey, everybody. Hope everybody's doing all right today. Of course, I'm assuming compliance or silence is compliance here. Everybody's having themselves a wonderful time.
No, I just couldn't find the unmute button.
It happens. It's okay.
Yeah.
All right, we'll just wait a minute or two here for some other people to join. I'm not expecting a big crowd just because it's Friday. But... All right. I was going to try something a little different today. I was going to, all the charts that I, take screenshots of. I'm going to try and share that screen, and then we could talk about some of the different targets and like how those are derived. Then also kind of talk about like where we're at here today. We don't have to go 45 minutes over the time. I'm sure everybody's got stuff to do, so I'll try to keep it concise today. All right, well, let's get rolling here. Time is money, right? So let's do it. All right. By the way, my son accused me of having an excessively large size beer yesterday at dinner, and I didn't deny it. So, getting called out by your kids isn't very fun. All right. So, all right, let's get rolling here. So let's just start out. And are you guys seeing my screen and everything? You guys all good?
Everything looks good.
Great. Okay. Awesome. You never know. All right. So let's just talk about Nasdaq here. So I'll just go through really briefly all the different indexes, because I kind of feel like we're not really seeing we're not really seeing a lot of action right now. It's just more consolidation. So if we go out to the daily level here, what I think is the most important part to show is that right now this pattern here that's been shown is really like one of those ascending wedge patterns, but it actually kind of looks more of like when you look at the Dow, kind of looks more like just a regular ABC. So I don't want to try to force it. Every time you try to force it, it never really goes well when you're talking about evaluation of patterns. But if you look at some of the different charts, they're all kind of looking like the same. Like we all seem to have this same this ABC up pattern. The Dow, for example, is sitting right here, like at the 0.618, and all the other different are too, except like the Nasdaq. The Nasdaq's looking a little weird, just because it went above its 618 here, but it hasn't really gone much past that. Now we do have a longer term trend line to worry about here, but this is kind of where I think the musical chair stops for the Nasdaq. So I think you guys have been aware. I've been crowing about this 23,315 level for the Nasdaq. I actually think it's probably gonna be a little bit higher, maybe like even 2,500, and that might be where you see a stop here. Now, part of the reason that I think that's realistic is because we did see pretty big rejection after only about 2 days above the trend line here that we had. If you guys remember, and this is what we've been seeing a lot of lately, is this little gap here. So the bulls don't really have enough energy, at least on the daily sort of move, where you're able to get above anything like resistance related, unless there's some sort of squeeze. And this was like Sunday night, came out of the blue, that kind of thing. And we also see some more of those too here. Like we saw another gap. This was the annoying one. So this is the gap that got over this wave 4 resistance level here at this like 18.5 level, the bear target. But gaps do close, and since this is a futures related sort of gap, that's an even more important gap in my opinion. I'm talking about this little guy right here, this little point spread. Now, the reason why it's more important because it's futures is because it trades all the time, and when you have a big gap up or a big gap down, then you typically see not only that gap close, but you see the commensurate move down in addition to that. So it's like the bears got kind of screwed because they had this big gap. They tried to sell it down and didn't get very far, but they got far enough where we a lot of people are trapped again. So it's like you had two big squeezes where if you weren't really prepared for it, or even if you had stops right here, it still didn't matter because this all happened like right after market closed. So the frustrating part about it is that even if you did everything right, you still wouldn't have been able to appropriately hedge that and manage that. So that was a bit frustrating because I feel like that was kind of a shyster kind of move. But anyways, long story short with it is Nasdaq climbing up here, starting to see a lot of resistance around the 200 daily moving average. And the 50 is still crossed over, and we would need to see probably another, I would say probably like 2 or maybe even 3 weeks of price being pinned here, or even just a little bit higher, in order for the 50 to start crossing back over again. But I still don't think that that's gonna happen unless there's a big squeeze. So it says extension zone up here, and the reason is because we had this big 786 level. So if we do see some sort of move like this, where we see this gap up squeeze over resistance, that's probably what we're going to see. If there's any maybe China talks this weekend, that kind of thing, that's my concern, is that you'll see maybe this maybe this sort of pop up here for a day or two, hit this level, and then you see there's a ton of sell delta up here. So that's where I'm not really concerned about holding a bunch of longs, or sorry, that's really where I think we will see a big pivot. We're starting to see some accumulation here anyways with, sorry, not accumulation. We're starting to see some of this, this daily sort of, a lot of sell volume, I guess you could say, a lot of sell delta from around this 19,800 level up to where we're at today. Now we do have some buying or some buy volume up here, but that's really you can kind of see some of the candlestick, or the top wicks up here that you could see. So anyways, what we're really looking for here is, where's this thing stop? Because I think I also noticed that Fred Frog was saying that he's expecting a pullback, that kind of thing. I think a lot of people are expecting a pullback. It's just a matter of going short at the right time instead of either being trapped or trying to be too smart, because that usually gets me in trouble. So so assuming that we don't really see any of this small tiny pullback, and it's just a continued move up, that this is a realistic view here where I mean freehand, just guessing, it was the 2,500 level. So it would probably be pretty close to that. So this 2,487, that's your A equals C level here for the Nasdaq. So I could see that happening. And again, I mean, it's with the trend line here. If it doesn't exceed it, this is really the key here. So if it hits a trend line and bounces down, it'll probably take a day for that, to kind of develop, or at least if there's a rejection, or maybe 2. But this is sort of your new bifurcation point, where you can either see the 2,900 level, or close to this 21,000 level, or really just kind of stay here at this 2,500 level. And again, I think there's a lot of sell delta up here, so you'll see a lot of resistance, especially if they try to jump it up. But the price action has been a little bit dicey over the last couple of days up here with the 200 daily moving average. And just as I zoom in, and this is sort of a deep dive proxy for all the other equity indexes right now, where if we do see this, this has been chopping up a lot of people lately, where we saw a flag and we kind of knew it was going to be a flag, then it kind of jumped up, and now we're testing these levels here. I think at the minimum we'll see this 315 level. So again, if you're holding shorts, try to focus on the prize here. But I think it's actually probably more likely we'll see this 2,500 level. And one of the reasons is because this is starting to look like a clear sort of like a bullish pennant. And this is where I'm starting to get those random bullish vibes, where just the symmetry of it's pretty important. So this also breaches that, or tries to reclaim that longer term trend line, but it's also kind of looks like an easier count, and it's more symmetrical over the long term. So this ABC here that you see, now it's starting to make a little bit more sense, right? Because now as we zoom out, we can see that, all these ABCs and things are all connected. So there's, it just continues to get smaller and smaller. But as we, take a step back and then we draw more of these, more of these patterns, we can start to see, I'm going to add some contrast here. We could start to see that there's bigger moves. So that's why I kind of feel like, there is going to be a little bit more upside, and maybe I'll throw some longs on the portfolio. I probably should, but anyways, if anything, just for a little bit of action, But I do think that we are going to see some sort of like last hurrah here for the bulls, and be mindful of these pattern lines, because we didn't really see a move down to touch this lower trend line, and that's kind of weird. It's kind of rare, but as we kind of continue up here, this seems like it's the last sort of B wave before we see that last like C up, and it's probably going to be a squeeze because there's not a lot of not a lot of participation throughout the the rest of the markets. Yes, market breadth is increasing. No, I can't deny that. However, we need to see if this sort of test is going to survive at all. And that's really, I think, going to be the big flip point, whether it's actually going to continue to be bullish, or it's going to resume that corrective leg down where a lot of people are expecting, including myself. So with that being said, if we take a look at like the S&P, it's similar. We have some of the same drawings here, but again, I don't think this wedge is a really acceptable sort of alternative here. I think we could probably see like this 57.88, but even 58.50 is probably realistic, and that's just because these are just longer term fib levels. Since this 618's been breached and we haven't really had a retreat yet, what we could see is this 5700 level being the last one here. So let me take some of this stuff out. So to kind of summarize here, so before I meander around, it's very similar to the Nasdaq, where like this 200 level is very important to test, and it will be tested. It's just a matter of when. And we can see that there's some sort of triangles developing all over the place. Just from a technical perspective, it just looks like like a healthy sort of consolidation, where these sort of like ascending wedges. You can see smaller ones, but there's typically a triangle is like a means to an end for a lot of these patterns, and especially if it's like a B wave, even if it did go higher than, let's say, this 50, or sorry, like almost this 5800, I really don't see it going much higher than that, just because all the sell delta up here, there's just a lot, and a lot of bears are going to be defending these levels. So the last thing I'll say here is that it's possible we would see something maybe like a head and shoulders like this, where maybe Sunday there's no China trade deal or something like that. We see a very, very small pullback, and that might be a good spot to maybe add like a long scalper or two, and then we could probably see like a buy up that might take a day or two or something like that, and then you could see this sort of head and shoulders pattern. But it's still too early to tell. I still think that this is not as realistic. For the S&P it might be, but for the Nasdaq, I think it's probably that's probably going to be what we see is just a little bit higher. Now, if we go to the Dow has not successfully reclaimed its trend line yet. It's a little bit off. Sorry about that, guys. It's a little bit off, but it's still, you can still kind of see the overall implications of it. So I mean, the Dow hasn't really had enough strength to get beyond it, and it's even having trouble testing its 50-day moving average here, where it got sold down as soon as it hit this 0.618. So the Dow typically leads, but you still have to have those other things in conjunction, like the 10-year yield, going up. You have to have the dollar going up, that kind of thing, in order for to have that that negative covariance with the yield in order to hold. So for small caps, about the same thing. It's kind of sitting right at that target, which is that, that A equals C sort of retrace. And, these wedges, I mean, this is probably now what the third time we've had a longer term sort of wedge that has yet to roll over, but these can be really good trades. In my experience, it sucks when it's like keeps driving up and you're like, when's it gonna return, pivot, when, like a lot of unrealized losses. Yes, that is painful. That's usually just a result of trying to go short too early. And this is where I get kind of frustrated. Like, you might have let's say like a portfolio or something for a 401k that's doing really well because you don't make aggressive trades with it, or it might be doing very poorly because you're trying to overthink it. But for right now, I think it's just there's a lot of big players out there that are distributing out into the strength, and they're not really in a rush to sell it down because they're probably thinking that this is one of the last sort of big rallies that we're going to see for a while. Now, again, it's speculation. I do not know that. But at least like from my, the analyst seat here, when you do see these high and tight sort of channels, they do move down pretty fast. So if you do have like and I will touch on this as soon as I get through some of these other charts. I'll touch on like how to trade the levels with it, because I know a lot of people are going to be curious about hedging and like where to hedge. So we'll talk about that here in a second. So the 10-year yield, this one has actually been behaving pretty well with the chart. I think longer term, you'll probably see something like this, which would probably crash the housing market, new auto sales, that kind of thing. But it's reality. I mean, tariffs are inflationary short term. There's a reason why Jay Powell didn't lower rates this week. So I mean, it was a very it wasn't surprising. Let's just say that. I mean, there's always some element of surprise, but it wasn't surprising that they didn't lower rates just because they're caught between a rock and a hard place. They don't really know what to do with tariffs. They just need to wait and see with more data. I do think that they'll probably be a little late, with lowering rates and stuff. But I think that the damage has already really been done with tariffs and the supply chain constraints that come with it. But it's just speculation at this point, so it remains to be seen. But those stocks are going to have to be reordered, then made, then sent across the sea, and they're still going to be, they're not going to resolve these tariff differences on one weekend. I mean, Trump and Xi aren't even at the same place. It's just a Treasury Secretary and CCP minion kind of thing, just to try to negotiate. I think they're just trying to kind of feel out the waters and see like how in trouble one side is versus another. Anyways, so gold is still being aggressive, I guess you could say. I mean, this is quite the spike. I think that eventually when it flips, like let's say there's some major catalyst or something for it, some change in monetary policy or whatever, something that's going to, make gold no longer, the go-to asset. And I think Jake actually brought this up earlier today about having a concern that Bitcoin might actually surge as a result of people are probably looking at gold saying, oh, it's really high. I agree, it's high, but still go higher, right? I mean, think about Nvidia and think about some of those other companies that just kept going and going and going. So there's really no like upper limit per se. My gut's telling me here that this is just a really extended fifth wave, and I think that like it already hit this 50 or this 3,500 target. And Don, I think I mentioned that earlier, but pardon me, I forgot that it already actually hit 3,500. I thought I'm like, oh yeah, we can make a new high at 3,500. No, so I'm thinking maybe more like 3,600 if you can. So that's like right up here. If this turns out to be like a wave 4, where this could be like, you could see the final sort of move up like this. If we do see like a huge runoff in equities, or maybe some very erratic yield trading, that kind of thing. So for real quick here, it just kind of looks like a little triangle, like a consolidation triangle. Volumes decreasing on it, so I think it's probably a good time for that to pivot. And then in conjunction with gold here, I'm thinking that you'll probably see maybe like a B wave here, and or like just to creep up a little bit higher, and then we'll probably see some sort of some sort of move down with metals. Oil has been a little difficult to trade recently. I still think it's going to hit this 62.50 level, and that's just like a normal sort of A equals C kind of move here. Yeah. Okay. So it's sort of like a conjunction, or it's like a confluence of fib levels, which is good. So that gives me more confidence that this bull target one's going to be hit. We're not going to be able to get out of the oil longs at the time, but what we can do is we can overhead short, and then we can use that underwater position as sort of like your risk-free trade almost. So like if you're hedged 1-to-1, you don't care if it goes up or down. Yes, you want to get out of them, but you can at least wait and be patient and not have to worry that you have this open directional trade that keeps going against you. So it's like the tale of two cities here, where you have something like MicroStrategy, where kind of keeps going up with Bitcoin, even though the earnings were terrible. You still can't force selling. You can't control it, of course. So the strategy was like, well, maybe it's going to turn here, maybe it's going to turn here, but we did say probably like 2 weeks ago that, okay, well, here's a good hedge level. And if you have a hedge, just leave it alone. Once you get some distance, some profitability there, maybe set a break-even order to get out of the long hedge. But usually there's enough time where you can tell something is topping, where like let's say a day or two, where you're able to really get out of your positions, or your long hedges, that kind of thing. Okay, so gas. This one's good. I think I mentioned earlier today, we're like 3-2 long versus short. I kind of expected this to head a little bit lower. I'm actually surprised it didn't head back down here and test the 200-day moving average. So yeah, I guess it could still probably do like an irregular sort of pattern like this, and then that would be your B wave. And that would be a good spot or like this bear target one, that would be a good spot to exit those cold shorts. I wouldn't add any more shorts up here, just because I think the higher probability is that you're going to see, you're probably going to see like another ABC like this, where you might get a little bit more distance there, and then it comes back to test this level where it broke out of, or at least this big long-term fib level here, this 618. Socks, yeah. this one is trading a little weird, but I still think we'll probably see this 200 level hit, or 199, whatever. It's pretty close. You probably see that level hit. I actually think Stocks S would be a good pickup there. The fund's already like mega short, so I'm trying to be careful with adding more shorts left and right, because I'm going to have to hedge long here in case I'm wrong for like the 50th time in a row. So so don't be laughing at that. I'm trying. Okay, so yes, long story short here is that Stocks looks like an ending diagonal here in a C leg, and this A equals C measurement here takes us to about this 200 level. Now, if you it's possible you could see an extension up here to like maybe 203. So that's kind of why I'm a little reluctant to say that we'll have and I actually think it's kind of likely here. So instead of like a wave 4, it might be like a series of ABCs, or you see something like this. Sorry, that's a little crude here, but still, it's kind of gone beyond that wave 4 sort of bounce point, and that's kind of how you do the wave trading. It's just the higher probability is, okay, it was a wave 4 and then it went above it. Okay, so it's probably not a wave 4 anymore. It's probably going to be like a B wave, so that might stop at this 50% retracement, or if it exceeds that, which it looks like it already is, then that. Oops, sorry, I got my fib screwed up here. I don't want to give it the wrong information. Okay, that looks a little bit better. Okay, so 204 is what I'm looking for. So yeah, 204 is if we do see this continuation, and again, you could probably see that with a pump, into like I was talking about the Nasdaq, how it might elevate just like one last time here, and that could bring stocks with it. But I do think that that's going to be one of those bullish things where, a lot of people could get trapped if they just, keep buying and buying and buying along with the market. And for Bitcoin's been aggravating, but this one does look like a wave 5 extension here after we've had this sort of ending diagonal. Now this, you don't actually see this very often at all. At least I don't. When you see these sort of patterns, usually they are ending patterns. I'd say like 90% of the time they're ending patterns. So that's what had given me some confidence to add to the SMST shorts. But unfortunately, that didn't quite work out. But you do see a lot of consolidation up here. You'll probably see this level hit, like the 104. What is this, like 104 700? But anything higher than that is going to be a bit of a struggle, just because, well, like, okay, so let's say, for example, it does make a new high. Then, in my opinion, that would be like an irregular sort of move. So you could see something like this, where that might just mean that crypto or like Bitcoin itself isn't done with its rally. So you don't want to force it, but at the same time, you can kind of see that we've got these 5 waves up here, and as a counter trend, just give it some time. So all right, so that kind of does that. Any questions? I guess I can talk about some trade levels and just do like a quick example. I didn't see Paul on. Paul had asked about. I don't see Paul on. He had asked about it. Maybe we'll cover that in more depth in next week's workshop. But so I guess let's do some questions if you guys have them.
Hey, James, what would be a good way to hedge long if you wanted to use options?
If you want to use options, so highly recommend. I can't tell you what to do, right? But I highly recommend taking a look at maybe like a bull call spread. So there's actually a good tool that you can use in TradingView here, where something like this. I know it looks a little bit confusing here, but pretty much what you're doing is you're buying a call, let's say at like, let's say at 100, and then you're selling a call at like 110, that kind of thing. So what you're doing is you're canceling out your theta burn while the market keeps kind of grinding. So you're not really losing much money every day in theta burn, but you're still capturing something like an upside. So if you're looking at here, let's do something like end of June, something like that. So let's do 10. So this is a good example here of what you could see here. So you're going to be limited to the loss, the maximum loss is how much you've paid for that spread. So if you do like a 10-point spread, it's really just the number of options times the point spread. So it'd be like, in this example, one option contract times 10 times the strike, and then whatever else is on there from the Black-Scholes model that calculates it. But essentially, it's like if the price goes above 110, then you're protected almost. It's like you don't really get all of the profit, but you still get some, and it's protected. So it's just one of those things where if you're at this level of the market, where if we're looking at this daily level, all this stuff up here, like this isn't a whole lot of range. And if you do like a let's say 5-point even spread, that's a lot tighter. It's a lot less expensive. If you do like a debit spread, I wouldn't do like a credit spread or anything at this time, just because if it goes against you, that could be like you'll have to give more money back. And I've run into the problem before where if you get credit for a spread and then you reinvest that someplace else, then that could have a cascade effect. Like, oh crap, I got to close that position now. Where let's say you have a loss or something, and then I now have to give back that money to the broker because I want to get out of my credit spread. So I always typically do like debit spreads, just because whatever you pay for that debit spread is like the max loss that you can incur. It's not like, naked puts can suck too, and naked calls, like especially if it goes against you, because then you just lose all of that. But the object here is really to not just limit your loss with something like this, with this sort of setup. It's not just to limit the loss, but it's also to protect. It's to protect your upside in like a slightly sideways market. There are some other strategies to use, like an iron condor or stuff like that, but those are a little complicated. I have always just had better success with just taking out just spreads and doing like 5 or 10 points depending on what I would kind of consider is the limit. So like again, if you're looking at QQQ, I'm actually going to be doing some put spreads next week, probably later in the week. And it's going to be on QQQ, so I guess you could look out for that. And I'll be happy to talk them through about like why I'm picking certain strikes and stuff like that. So don't let me give a short answer on that. If you have good questions, or not good. If you have questions, and I'm happy to talk that through. But yeah, so long story short here is that like something like a bull call spread will while we're waiting, you don't really have all of that theta burn that's gonna destroy your original position. Like let's say you buy 1 week like a weekly option, you're losing hundreds of dollars a day in theta burn. Let that be somebody else's problem. Like sell an option to, yes, you'll limit your profits, but again, I don't think this is going to the moon anytime soon. It's just we might see a squeeze here and there, but as we start to run into this higher sell delta, as we get higher up with the Nasdaq, like up around here, you're going to start to see a lot more resistance, and then ultimately, the formation of a pullback. So hopefully that answered your question there. You could do some like calls, but yeah, I would you still want to protect yourself with any like naked options play. I've gotten burned so many times just doing naked options, thinking that, oh yeah, this has got to be it, and then you open the trading panel on Monday and the position's on sale, half off, So, all right, what other questions you guys got? Oh, it's okay.
Yeah, do you think we're in an event-driven market?
Say that again.
Do you, in your experience, are we in an event-driven market right now?
Oh, yes. Yeah. Event-driven market. Yeah. So the just what we've been seeing, the market goes in cycles like everything else. And normally you have a lot of cycles, like it's not news driven. It's more of like data driven, right? So you'll see a lot of like the fluctuations. I've seen Fed days before where we're down 3% or we're up 3% after the announcement's been made. Now it's more of like you have a tweet and the market drops 10%, of the market, shoots up 10%. So that's more, I think people are waiting for events because the data right now isn't looking very good overall, but the catalyst for sells and buys, I think, are more on events. I don't know. I just think that people are looking for clarity, and markets don't like uncertainty. And right now, equities are just climbing the wall of worry. Susan, you had your hand up. Go ahead.
Yeah. Hey, back to the call spreads. Do you generally follow any guidelines in terms of how much you'll pay for a 10-point call spread, or are you just mainly looking at the levels where you buy and sell based on your charts? How are you doing it?
Yeah. Okay. Good question. So I typically, I'll set like a budget for one specific call spread. And the budget is more of like, okay, so let's say you use like $5,000. So maybe you spread it out a little bit. So you do like maybe like 2,000 in debit spreads for QQQ, which is, maybe you get like 3 or 4, and then maybe, with like, the same amount of money for SPY, you might get maybe like 5 or 6, that kind of thing. It's just kind of based on like how the pricing is. But I typically use the same unit strategy where it's like, I only have X amount of dollars I'm willing to wager for an options related play. So if you can kind of like, box that in, that's one consideration. But I always typically use the levels like on the charts as my guide. So if let me try pulling up QQQ real quick. And I'll kind of show you what I mean. So if we do just draw a quick fib here. And then we see where this is going. So, like let's say we wait a couple, a couple days, and market pushes up just a little bit more and kind of ends about here, like let's say at 500. So what I would do, oops, there you go. So what I would do here is, because that's a 10-point spread, and that's actually, I think, a pretty good trade here. So with this 10-point spread, what you sell a call here, and then I'm sorry, like a put spread. I'm sorry. This is where you would so you would like buy a put and then sell a put. And what that does is that gives you that 10-point spread. So as you're moving this, and you know what, let me actually draw a box. It's easier to kind of show. So now that you have this range here, now that you have this range, if the market does this sort of thing, then your put spread is instantly profitable, because also now like the valuation shoots up as well. But that, I mean, since you've already sold an option, it doesn't really matter. Like, the people that make big money with buying puts at the right time, it's really because like the VIX increases and the value of the option increases, not necessarily the amount of points it's moved. It's more about like what influences the entire valuation process of the option in general. So when you're talking about, like how to play something like this, let's say, you have a put spread and you're trying to do that. You can cash it out. So let's say, the price gets back to 488, you probably double your money with that. If it goes down here and let's say you did a short-term horizon, maybe like a 3-week, but anything, with spreads, you have time. So maybe like a month or something, you still wouldn't get like as much money, but it's less risk. So the money that you put in, you could like cash out half or something like that to get all your money back. So now you're just playing on house money. And the same thing will work with like a call spread. So to use that example, so let's say today where the market ended. So 488, you want to buy call, and then like up here. So let's say like 500 or something. Oh wait, no, let's do 498. And then you would want to sell a call. So it's the same concept. It's just in reverse here. So you have you got your bull call spread, and then as the price moves up, so let's say it heads up here, you sold the call, so you still have all of this value, or all of this point value here. That is now you're in the money big time here. Not like crazy, but you're still like it, the price goes up here. You still only get this 10-point window of profit, but you get more profit from it because the value of the sold call deteriorates over time. So pretty much what the what the magic is of the spread is that if you pick the right spot like this, let's say for example, then it kind of chops around. The theta burn is going to be minimal, but if the price does hit like your upper level, then you can still make a lot of profit because you have calls that were bought at this 488 level, and then you sold them at the 498 level, so you would get that 10-point gain there out of your call option. Does that make sense? Hopefully, I'm explaining this correctly.
Yeah, I've done longer term bull call spreads. It's binary, but if you kind of have a sense, I've been more of a buy and hold long term. But
Okay.
if you have a sense of, during the heady low interest rate time and growth was go growth, it was pretty easy to make money on a lot of options, including leaps and synthetic longs and all the rest. But with these shorter term things, it's so binary. I was just trying to figure out how far out do you have limits on how much you're willing to pay for a certain spread. But it just sounds like how much money you have in your account, and you're basing it off of the chart levels is kind of how you're doing it.
Yeah, pretty much. I'd say I put more stock in like the chart levels as opposed to the money in. It kind of depends on the opportunity. Like, for example, if I'm looking at a chart, so let's say, I don't have it on this one, like I put on some Bollinger Bands or something, and it's at like 3 standard deviations away from the mean from like 14 days or something. I'm like, you bet I'm going to add more, add more put spreads, something like that. So it's kind of like, the same concepts of, ETF trades where it's like, okay, so I add 1 unit because I think I might reverse here, maybe not. And then you'll add another one if you're wrong. And, so you just kind of compound that. It's the same thing with the spreads. So like, for example, what I've done before is I've actually tried like calendar spreads where I might have, and I think, Chris has a lot of good information on this. I think he dropped off, but like the calendar spreads, let's say you could have, so let's say, for example, you take out a put like 6 months later, or like 6 months from now for expiration, and then you sell a put that expires, let's say a month from now or something like that. I mean, it's just an example, but you could continue to do that. So that's like it's like you're hedging with an ETF, but it's just the option. So you're still keeping that point spread and you're trying to reduce your theta burn longer term, but like a longer term option, the value doesn't decrease as fast.
Right. So you're basically selling that put also to help pay for that
Yes.
that longer term put.
That's right.
But the theta burn on the sold put is going to be a lot faster. So
That's
you
right.
kind of roll that depending on where the market is.
Yep.
Yeah. So if you're trying to hedge like a little longer term out, the calendar spreads are kind of helpful that way.
Oh yeah. Yeah. They're great.
Okay.
Yeah. And if you have more questions about that, please let me know. Cause that's a strategy I've done in the past, and it's worked pretty well, where especially like right where we're at now, if I'm going to do like let's say a put spread or something, if it's going to really, if it's looking like it's going to be a longer term, downtrend kind of thing, and it might be, but if it is like, buying some puts like 6 months out, that kind of thing, even if the VIX goes up, 10 points or something like that, I mean, the value of those puts are gonna increase pretty much. But that's kind of the double-edged sword with the calendar spread, is that the put that you sold is going to increase at a rate higher than the put that you bought longer term. Your delta is probably not going to change much, but your overall, like the theta calculation and some of your gamma and vega stuff is going to influence the price of that. So there's a little bit more price sensitivity, I would say, if you're going to sell a put or something with like a shorter term horizon. But what's really nice is like, if you do buy, let's say a call, or like you do a bull call spread or something, or calendar spread, whatever you want to do, and you hold that call for a long period of time, the closer it gets to expiration, your delta increases. So that means that, the closer your option gets to expiration, it's going to increase in value, especially if it's like deep in the money. So you could continue to hedge those if you have a long-term one. It just depends on kind of where you're at. But yeah, I would say the longer term like fib levels, like especially using like a daily chart like this, is going to be very helpful for you to pick your levels. But I will be doing some of those likely next week. So I'll be happy to kind of talk through some of that reasoning.
Thanks.
Any other questions? Still crowd for a Friday, right? Okay. So I guess maybe I'll save like the trading of the levels, unless somebody wants to go into that. I can talk through like an example, but yeah, I mean, other than that, I mean, we don't have to keep droning on about. I talk a lot, so I want to give you guys the opportunity to ask a question or something. Okay. All right. So I guess if nobody's got anything else, we can wrap up. But what I'll just say here to kind of close out the week is that, yeah, it's been a difficult week for shorts. But at the same time, this is typical of like late stage bull cycle, where the bulls are just kind of like running, and now they're getting into a little bit of if you zoom in a little bit, they're kind of getting into a bit of a jam where it's, they're slowly creeping up, but you can definitely see that there's some selling into it. And that's what you want to see when you're expecting a reversal. It's just that, the markets move like a glacier, and we always get tripped up in, like the, 5-minute charts, the hour charts, whatever. But if you take a step back and you want to talk about like a more full strategy here of like longer term, what should I do? Like for, let's say, a 401k portfolio, where you don't really want to make really risky trades. You just want to make the right trades at the right time, which is difficult to do unless you have discipline and some patience. So what I would like, for example, what I'm waiting for, like with my 401k stuff, is I've already added a little bit of shorts with that. But if we do get up to this like 2,500 region, when we test up this, or when we test this trend line, I'm going to add a lot more. And then, like I said yesterday with the rubber band snap, it's like, it's either going to snap back or it's going to break and the whole market is going to explode. Probably not, but, yeah, I guess that, yeah, I just wanted to say, like, some of the strategy here is that longer term. Yeah. I mean, we've been waiting on this for quite some time. We had a, retrace down here, and then they just took it and ran with it. And they did have that little trick to get above resistance, which kind of lame that they did that, but it is what it is. We played most, we played the most complex and difficult game in the world. So just having some patience and waiting for the market to top here, and then ultimately head back down. I mean, that's kind of what I'm waiting for. And I still think it's probably a little risky to add some longs up here, is even like a hedge, or not a hedge, but like for example, I wouldn't feel comfortable doing like a full 1-to-1 hedge. I just feel like it would be a little, I just, as soon as I add it, it's going to reverse. I know it. You say that all the time, and then you're wrong, and it just keeps creeping up and up and up. But no, it's I joke about it, but the reality is like there is risk to go long up here, especially with supply shortages headed to a store near you very soon. You're starting to see some declines in good data and stuff. Fed's holding rates flat. I mean, we're not going to find out any more for 2 months from those guys, and a lot happens in 2 months. So it's just like, if you're going to hedge, probably do like a 50% hedge or something, and then set like another 50% above key levels. Just as an example, like, I mean, if you are going to hedge, and you have like a limit order or something, like for 50%, I wouldn't add the other 50% until I get up here to, beyond this 2050 level. And yeah, you could have some unrealized losses. That's just how I would trade it. You could have some, decent unrealized losses, but, markets don't go up for forever. And now that we had a really big ABC sort of view here, and like I said before, I think the damage has really already been done, with supply shortages and all sorts of stuff like that. Plus, you've seen lots of layoffs and things like that. Something's not right underneath the surface, and it kind of all changed in like January, February. So again, you got to just keep an eye on the narrative. So as Jake asked, is it really more like event driven? Yeah, I think it is. It's because everybody kind of knows the data is a little shaky now, and they're just kind of looking for the silver lining. And tariffs really caused all of the like all the selling and stuff that we saw, but it was already kind of on the way down anyways. So I don't want to pin all the blame on it, but it's certainly not helping. So anyways, to kind of wrap up here, that's really the summary. Is just that we might probably have like one more little local high here, but we're still at those big long-term moving averages. We've got a lot of bearish signals here. We've got a bearish technical pattern. We've got the 50 crossing over the 200. That's a big long-term weakness flag, but it still doesn't mean it can't go up higher. So just, I guess, stay on your feet. And if you are short and trapped, you probably won't be trapped for much longer, but you still just have to tread water, and you're in trade jail for the time being until we can the patterns kind of resolve themselves, and yeah, hopefully we time it right and make ourselves a big boatload of cash. So all right, yeah, go ahead. You got a question? Yeah, mute. Thinking you're on mute. I can't unmute somebody else. You want to type your question? Okay. Maybe some technical difficulties.
Yeah, can you hear me?
Yes. Okay, here you go.
Can Bitcoin, MicroStrategy, all the different coins that are being generated by groups, do you still think Bitcoin is going to follow the markets as far as up and down?
Oh, good question. So I think like the dollar right now is the biggest driver of adoption with it. So if the dollar continues to fall, then you'll probably see more of a flight towards something safety or like some sort of safety like Bitcoin or some of these other coins and stuff. But I also kind of think that like liquidity is a major concern for it. So you get a lot of these coins, like, I mean, I could do a coin, the Gains coin or something, and I could probably get some people to, some suckers to pay for it, but like, there's only so much money that we have in the system for people to invest in these things. So something needs to give. Either crypto needs to take a step back, and then people flood back more into like bonds or equities or whatever. But we can't have all things rise in tandem together because there's just not enough money to keep that driving higher, or at least like. There's always going to be that like wave of resistance with people selling into it. So when I look at something like the Bitcoin chart here, I see a lot of these big gains all happen at once. A lot of these just big rippers. You see a lot of these big buys over here, and that's just bulls driving up the market. But I think it really kind of depends on the dollar. So if the dollar strengthens, which it probably should here, with especially if the yields forecasted to go up, then we'll probably have a pullback with some of these like some of the different cryptocurrencies. They've really been very static and stable for over the last, I'd say, 2-3 years, and it's actually kind of a surprise. But I still have a hard time investing in something that's one, just computer code. There's no assets to own. So if it goes, default, then that's it. Your money's gone. But I think it's also susceptible to very fast crashes, and there's really no like international regulatory body that trips a circuit breaker or something when Bitcoin drops 15%, unless I'm mistaken, unless there is something like that, but not that I'm aware of. And yeah, I mean, hopefully it answers your question. It's just that like it's been leading, but it kind of takes turns with either the yield or like the Dow. So it's really kind of tough to pin down. But I think that Bitcoin is like Jake mentioned, or Jake brought up earlier today. It kind of like it's a store of value that isn't the typical store of value. And there's really no rules when it comes to that, because we don't really know what a top's going to be. Like, for example, gold. Gold keeps flying higher and higher, but people are obviously looking for some sort of safety and security. And U.S. bonds are now not as attractive as they used to be. One, they don't pay the interest that they probably should for the risk. And, just saying in general, like the cryptocurrency stuff is probably you're not gonna follow. It's probably going to become untethered, I guess you could say. I don't know if that's a pun or not. To like its correlation with equities. Hopefully that answered your question. Susan, did you have another question?
Just briefly, are you still thinking shorting Tesla around 300?
Ooh, good question.
Ooh.
Let me find my other. Yes. Okay, one second. Let me share my other screen here. Oh boy. Crap. Hold on. I got a bunch of stuff on here. I was playing with stuff earlier. Okay. There you go. Tesla. So here's kind of the reason why I think Tesla is a decent short. I'd say overall, this does look like a pretty clear, like a 5-way down pattern from the top. And, that's a pretty large, a pretty large drop here. And it kind of looks like that there's, sorry, I don't jump around. It kind of does look like there is, like a lot of these ABC waves in here. And that's typical of these sort of like, wave 4 ending diagonals, whatever you want to call them. Sometimes you see a little bit of like pattern expansion with this, but this 0.382 level at 300 is, in my opinion, a pretty key level. You can also kind of see some volume down here too. Plus earnings, holy beans, did they suck with earnings? Kind of like MicroStrategy, and you saw the opposite impact. So, I don't think that this is a long-lasting sort of thing. I just think that it's you're kind of like, the market's being pumped up, so maybe Elon can sell some shares or whatever, and then it could just drop again, and then pick up all those shares again at 200, as opposed to 300. But if this is going to turn into be something like this 5-wave down, I would expect that to start maybe in like 2 weeks, or maybe like a week. It just depends. Like if we do have a squeeze and we make that higher high with Nasdaq, then most likely, Tesla's gonna shoot up a little bit higher. Typically, when you see like a violation of a fib level like this, that typically means that the bulls are going to try to hit the next one, just because they're trying to gauge, selling resistance. So I guess, it's like you pump the market to get past the level, and then you see what happens afterwards. And, we saw that it was rejected. But as long as it stays below this 300 level, that is like your bifurcation point for the range. So what I would say here is like, if it does not make, or like if it doesn't continue up like this and just, blah, 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 because that would, obviously not the right time to short. But if you do see a little bit more of this consolidation like this, and maybe you see something like that, like this sort of like pullback would be the right place to add a short, because then you could be like right at the cusp of a wave 3. And what else you want to look for is something more, like a head and shoulders kind of pattern. So if you do see something like this, you could get a really good entry closer to 300, but have more confirmation that you're actually going to be able to see this sort of decline afterwards. So that's kind of what I'm hopefully looking for, is that again, that like the portfolio is very heavy short, and I don't want to add more if there doesn't look like there's a like a good confirmation that it's time to head back down, if that makes sense.
Yeah, thank you.
Sure. Okay. Any other questions? I guess we got about like 2 minutes left. Then I gotta wrap up and do some other stuff. I gotta go pick up the boy at school. Any other questions or comments, concerns, complaints? We don't want complaints on Fridays. All right. Cool. Well, thanks guys for joining. A decent crowd for a Friday, and hopefully we get what we want here, and in the next next couple days, and hopefully we can all make some money. All right, guys. We'll talk to you later. Have a great weekend.